Okay, so maybe you started a new job and were told that you're considered an independent contractor for tax purposes. Or maybe you started working for a rideshare company or one of those food delivery places and noticed that there weren't any taxes being taken out of your pay. Well, in either instance, the reason why no taxes will be deducted from your pay is, well, because you are now responsible for them, not the employer. So with the next estimated tax payment date quickly approaching us, and well, to keep you from having a heart attack come tax time by getting hit with a whopping tax bill that you don't have the money to pay it with because you spent it all, we decided to make a video telling you everything you need to know about estimated or quarterly tax payments. I'm even going to show you how to send your payments to the IRS in less than 5 minutes by using their online payment system. No more checks to write or searching for an envelope or a stamp. I mean, who even writes checks anymore, right? Ready to get started? Then let's go, peeps. Welcome to Tax Chit Chat, the place where we talk all things tax all the time. So what exactly are estimated taxes? Well, the U.S. income tax system is a pay-as-you-go one, meaning you're supposed to pay the tax to the government as you earn or receive the income throughout the year. Now, there are two ways to pay as you go, either by employer withholding or estimated tax payments. Employer withholding happens when you're an employee and you get a W-2 at the end of the year so that you can file your tax return. Estimated tax payments, on the other hand, sometimes called paying quarterly taxes, is how people pay tax on income that is not subject to withholding. These people may receive their pay in the form of cash, like a barber or a hairstylist, or their employer may issue them a Form 1099 NEC or Form 1099 MISC for them to file their tax return, like a food delivery person, a real estate agent, or a truck driver. Next, who has to pay estimated taxes? In short, anyone who doesn't have taxes withheld on their pay they earn generally should pay estimated taxes. This type of income usually includes self-employment or freelance work, interest, dividends, alimony, rents, gains from the sale of assets, prizes, and awards. So what I often tell clients is that if, when you file your taxes, you are going to report income as a sole proprietor, a partner, or as corporation shareholder, you generally have to make estimated tax payments if you expect to owe tax of $1,000 or more when you file your return. If you are filing as a corporation, meaning an 1120 or a C corporation, you generally have to make estimated tax payments if you expect the company to owe tax of $500 or more when you file its return. Now, the one warning I often tell individuals is that if you don't pay enough estimated taxes by the due date of each payment, the IRS and/or state may charge you a penalty, even if you're owed a refund when you file your tax return. Dude, that's like messed up, right? So when are payments due? The reason some people call estimated payments quarterly taxes is because, you guessed it, they're paid quarterly. For estimated tax purposes, the year is divided into 4 payment periods. Each period has a specific payment due date. In 2021, these due dates were/are April the 15th, June the 15th, September the 15th, and January 17th of 2022. Basically, the due date is the 15th of each month that's listed, unless the 15th falls on a weekend, and this is why the January due date is moved to January the 17th, because January 15th, 2022 happens to be a Saturday. How to calculate estimated taxes. Now, this is where things can get complicated for most people, but I'm going to give you some tips on how to keep this exercise simple yet accurate. To figure your estimated tax, you must figure your expected adjusted gross income, taxable income, taxes, deductions, and credits for the year. The worksheet in Form 1040-ES can be used to help you figure the amount, and I've put a link to it and everything else I've discussed in the video down in the description below. But like most IRS forms, it can be a little bit confusing. So here's some quick ways to come up with how much to send the IRS and your state government. First, go to the 1040-ES voucher and go to the tax rate schedule page. Look up the tax rate based on how much you will net from the job that doesn't have any taxes taken out of it that applies to your filing status. Take that amount, divide it by 4, and that's the amount you should send each quarter. Okay, wait, I take that back. That's only for the income tax portion. As a self-employed person, meaning you get a 1099 NEC or 1099 MISC, you have to add on your self-employment tax. This is basically Social Security and Medicare taxes. To do this, take the net income from the job, multiply it by 92.35%, and then multiply that number by 15.3%. Divide it by 4 and add it to the first number you calculated, and that is the amount you should send each quarter. Now, If you're going to earn about the same amount as you did last year, I have a faster way for you to calculate the amount to send. Take a look at the taxable income line from last year's tax return. Divide that number by 4 and pay that amount. This is because you will not have to pay the penalty for underpayment of estimated taxes if you pay 100% of the tax shown on the return for the prior year. So just pay what you paid last year. Quick, right? But if you'll make more this year than last year, use the first method I discussed and just make sure that you pay 90% of that amount. Once again, that will get you out of being subject to the penalty for not paying enough estimated taxes by the stated due date. Since many states also require you to make estimated payments, I suggest going to the website for your state Department of Revenue and looking up your tax rate based on their tax tables. In Illinois, we pay a flat 4.95% on our taxes at the moment. So I just take that percentage and multiply that by the amount of money that I was going to net or profit from my activity. Divide that by 4 and send Illinois that amount each quarter. But you're not going to want to send that to Illinois unless you live here. In your case, just make sure that you send it to your state's Department of Revenue, okay? Finally, how to pay estimated taxes. If you're an individual, you can make your payments in one of 2 ways. Complete the voucher for the appropriate quarter you're making the payment for. Make your check out to the United States Treasury. Don't forget to write your Social Security number and write the year Form 1040-ES on the memo line. So right now it would be 2021 Form 1040-ES that you put on the memo line. And make sure it's mailed and postmarked by the due date. It has to be postmarked by the due date to be considered mailed on time. So remember that if you're dropping it in a mailbox. Now, to make your payment electronically, head on over to irs.gov, select the pay option, and then select bank account direct pay. You can then select make a payment, and on the next screen, select estimated tax. This will cause the screen to automatically select what to apply the payment to, and the year will automatically change to the current year. That's because estimated payments can only be made for the current year versus, say, a balance due payment, which can be made for any of the past tax years that a person still owes taxes for. For a business, you would head on over to EFTPS.com, which is the Electronic Federal Tax Payment System. If you haven't registered, you can sign up, and if you have, you would just simply log in. From the main screen, you would select the payment option. If you know what tax form your company files, like 1120, 1065, or 1120S, then you would simply enter that in the top box. But if you didn't, then you can select it from the most common forms drop down. For the tax type, you would select federal tax deposit to make an estimated payment. On the next screen, you would indicate the amount that you are paying, the year that it applies to, in this particular case 2021, and you would then go ahead and put the date that you want the payment to be deducted from the company's bank account. And there you have it, how to calculate and make estimated tax payments. Now, if you have a question that you would like us to answer in a future episode, then feel free to shoot us an email via the address in the description below. And did you find value in this video? Then please consider giving it a thumbs up or subscribing to the channel. Just make sure you click the little bell icon when you do. That way you'll get a notification whenever we upload a future video. So like I say at the end of every video, until we meet again, keep earning, keep learning, and just like that, this chat is adjourned.